Welcome to YP Investors Quick Tips. Today we're going to be going over an easy and successful investing strategy. Let's pop on over to the YP Investors homepage. And from here, once you're logged in, let's go to the Tools tab, scroll down to Top Stocks and Sector ETFs. Let's go to this tool. And we're going to focus on the left side of the page here. We're going to look at the strongest to weakest rankings of the sector ETFs using the relative strength head-to-head. So this means all these sectors are ranked head-to-head using relative strength. So the stronger sector is going to win. And the sector with the most wins is going to be ranked number one. And technology has been ranked number one all of 2019 thus far. And we're in July right now, so it's halfway through. So at the beginning of the year, a good strategy is to invest into the top sector. And these are equal weighted sectors, so you're not going to be overweighted on a certain stock. Equal weight means that each stock in the sector has an equal amount invested to it, equal percentage. When you look at the S&P 500 or the SPY ETFs, there's going to be a large amount in some of the bigger stocks like Amazon and Apple. They're going to have a larger percentage of the shares. So if those particular stocks do worse, but then the majority of stocks do good, that sector ETF could be actually bad because the majority of the actual percentage did bad because of just those few stocks. So that's the reason you want an equal weighted sector. That means if the sector actually is good, all the stocks are equal, so if the majority of stocks are doing well, the sector is going to do well. So let's get into the stock selector tool for the technology ETF. So let's scroll down to the point figure chart. Now an easy thing to do is to make sure that this sector is in a positive trend, which it should be if it's ranked number one among all the sectors. The next thing you'd want to do before you just buy in is to look at where it's at. I mean, even if it's the beginning of the year and you want to get your money invested right away, you don't want to buy in, at this point at $144 because you're going to put yourself into a bad situation where you're going to make up a bunch of percentage, because that is a quadruple bottom sell signal. And if you're buying in right at that 144, odds are it's going to go down. So you could just wait until it hits the column of X's and then buy. You can wait for a buy signal and buy in. It's up to you how aggressive you want to be on your strategy. And these sector ETFs typically don't change too much. They're not as volatile as some stocks. So it's going to be a slow and steady incline. But if you invested in this technology sector in 2019, you'd be up 29.66% thus far, and we're halfway through the year only. So I mean, yeah, I could lose some, but it also could gain another 30%. So I mean, you could even just sell out at this point and just take some easy, bond strategy or preserving income strategy if you just want to be, if you're just satisfied with your 30% income, which is excellent, excellent return. So it's totally up to you. Another thing that we want to point out is these sectors can change throughout the year. The top ranked sector this year, the number one hasn't changed. Some of the other ones have changed in ranking, and at YP Investors we take care of that monitoring of the sector ranking for you. And anytime the sectors are changed in rank, you're going to get an automated email update telling you that, hey, the technology is now ranked number 3 and utilities and industrials are ranked higher. So we do all that work for you. All you have to do is check your email and then decide whether or not you want to sell out of the top sector, or a good strategy is maybe if you did have technology right now and let's say utilities ranks higher than it next week and you're in technology, you can either wait for a sell signal or you can look at utilities, and if utilities is close to a buy signal, maybe you want to buy in at that buy signal and just change over your portfolio at that point. So you just set a little alert for the next buy signal of the new sector and rotate in there, or you just rotate it in completely right away, or you rotate half in. It's just completely up to you, but investing in one of the top 2 sectors performing is a solid strategy that's proven year over year to have great returns, and it's just an easy strategy to utilize. Another important thing you want to note is always be aware of the market conditions. Even though you're going to be passive and in this investment for a while, it's always good to be aware of the market conditions, because as you can see, December here, the market conditions changed to bad. So this is where, if you were holding this sector ETF, the market conditions went bad and the price dropped significantly, as did most of the stocks in the market. And then January came and the market conditions switched back to good, and maybe that's when you buy back in. But you can also ignore the market conditions. It just depends on how safe you want to be in your investments. As you can see, these don't change too much. You can see in 2016 it just went up maybe $6 the whole year, and then between 2016 and 17, not much movement. 17 and 18, maybe 4 columns of movement. So these aren't going to be, 18 was a lot of movement for the technology ETF, but these aren't going to be big movements most of the time. So it's up to you if you want to hold it or sell it when the market conditions change. So our YP quick tip to you is to have a good strategy in investing, and if you don't, there's a very simple strategy, and it's called Sector ETF Investing. So thanks for joining us today, and good luck on your investments.